All right, welcome back. It is earnings season, and we've got our first earnings video for this quarter. We're going to talk about SOFI today. So this is a stock I've mentioned many times in other videos. This is my newest purchase. It's a stock I've owned a long time ago, but I got out a long time ago also. So really ugly chart here. SOFI, real quick, little history, came public via SPAC. It was sponsored by Chamath Palihapitiya. He's one of the besties on the All In podcast. This is a bank that I've used since 2020. I don't use it necessarily for banking purposes. I do have a checking, a savings, and a business investment account with them. They have a ton of options. I personally have not had any problems with them. Anytime I have questions, I can always get on the call with someone quickly. And I've always enjoyed using their products. So this is a company I've known for a while. I followed them for a while, been in and out, but I am back in my investing account. And I have a very small position here. And after listening to their earnings and seeing their earnings for the last couple years here, they're definitely in the right direction here. So again, this chart is ugly, but long term, I think there's a lot of potential for this business. And we're going to go ahead and dive into some of the numbers, and we'll give a little bit of a bull and bear case for SOFI stock long term at the end of the video. So starting off here for quarter four, their member growth was up 34% year over year with 10 million members. So that is awesome. A lot of people there. And again, SOFI is more of the younger generation, more of the unbanked generation. You're not going to see your grandpa necessarily opening up a SOFI account, most likely. They also have some big advertising partnerships with SoFi Stadium in Los Angeles, and then also recently with the Tiger Woods Golf League in Florida. So they have a lot of younger audience looking at their logo all the time. So member growth looking good, and that's been the biggest growth driver for them. Is they've always been really good at adding more members. It's been the profitability and some of the real revenue growth has been the lagging story until these last 6 quarters or so. So for revenue, they were up 19% year over year to $734 million in revenue. So nothing super spectacular, but for the size of the business, it's not terrible at all. And this quarter, they did have their 5th consecutive profitable quarter. So again, back in the day, they were not profitable. They were reinvesting a ton of money into their business. But for the last 5 quarters, they're showing a profit, which is great to see. And their largest segment of their business is going to be lending. So that was up 22% year over year with record originations of $7.2 billion. So looking really good there. SOFI is pretty popular for their student loans. They also have a technology platform. There goes the market. Market is closed. Technology platform called Galileo that helps other fintechs with their back end. This has been something that I was really excited for back in the day. I remember when they acquired it, but it really hasn't been the huge growth driver that I thought it was going to be. So we will see how that continues to evolve in the future. And then financial services was up 84% year over year in Q4, and that is driven by deposits that are up to 26 billion. So fee-based income was up 63% for $289 million in revenue. Margins, lending was 59% margins, tech platform 31%, financial services 45%. So this is a high margin business. They don't have to pay for steel, they don't have to pay for wood and all these other things for their products or services. It's all financial based. So there's a lot of meat on the bone for them to get. So stock performance, it was down after their earnings. They announced on a terrible day, unlucky day, Monday morning when everyone was freaking out about DeepSeek and the whole market was down big. So people were selling anything they can get their hands on, and SOFI was down as well. Based on what I saw from the earnings call, the stock was also down because of their full year guidance. Now, their full year guidance on profitability, This is going to be one of the first years in a while that they're having to pay taxes. Now, a smart business, if you're going to pay taxes, you pay taxes on your profits. So they're going to show a little bit less profit. Their revenue is going to be higher, but their profit's going to be lower. And instead of having a large profit and having a large tax bill, they're going to have a modest profit and a modest tax bill, but they're going to take a lot of the revenue and reinvest it into the business. So that was their explanation for the slightly softer profit in 2025. And to me, that makes a lot of sense. There's also benefits in paying taxes. You get some tax benefits when it comes to your balance sheet as well. So that's what they stated. Strategic focus, investing heavily in SOFI Plus, SOFI Invest. They just got options on SOFI, which is great, but they still have a long way to go to catch up to someone like Robinhood or any other investment platform out there. So bull case here, profitable growth, diversified revenue streams, strong user base, and the macro tailwind. So SoFi is a small bank, which is going to benefit from lower rates. That is the theory here. Bear case, high valuation, reinvestment pressure, competition, and execution risk in the tech platform. So there's definitely a ton of competition. It's not the cheapest stock, but it's definitely not the most expensive stock out there. It's somewhere in the middle. So for me, a good price to be buying for myself, not financial advice, do your own research, is somewhere around the $15 range. That's when I'll be buying a little bit more aggressive. Right now, I'm just kind of nibbling in and waiting for the market to give me a clear sign, hey, let's go buy some SoFi. And once we get around $15, that'll be the more aggressive entry point for me. So now let's take a look at some graphics. This is the Q4 earnings breakdown. Again, lending $418 million, that's up 18% year over year. Technology platform $103 million. Financial services $256 million for the quarter. And their fastest growing segment is the financial services. Members, 10 million, we talked about that, 34% year over year. Products, 14.7 million, up 32% year over year, with a very small net income at the end of the day. A lot of expense here. Now, this is a great chart. Member growth in millions. Just beautiful growth, beautiful chart here. Definitely want to keep that moving, which they've done a phenomenal job. This is hard to do, but they're doing a wonderful job. Profit contribution, you can see here, the tech platform really hasn't done a whole lot, but the lending has always been very steady, and now we're seeing the financial services be that next big growth model for SoFi. Let's see here. This is talking a little bit about Galileo, what they do, technology platform accounts, so that is growing. Financial services Loop. So they have all these different products. There's a lot of things on SoFi. If you're looking for basically anything, not only will they have it themselves, but like, for example, I need a small business checking account. They don't offer that, but they sent me referrals to a couple places where I could look to get those services. So they're also really great at, they call it the one-stop shop. If we don't have it, we have great partners that will work with you to get you what you're looking for. So really enjoy that. And getting someone on the phone is just so easy with SoFi versus Bank of America. I remember waiting for an hour to get on the phone with somebody. And even that experience was very unpleasant. So that is the benefit of being a little bit smaller. They have a little bit better customer service. It's a little bit more boutique than some of these big bad banks. So let's go ahead and take a look here at the pros for long-term investing. They're a full-stack fintech leader. There's a lot of competition out there, but in my opinion, not everyone has a little bit of specialty. They do it all. So if you're going to Robinhood, you're going to invest. If you're going to go to Square, you're going for payments. If you're going to SoFi, you can do all of the above. Member growth, another huge driver for the long term. We already talked about profitability. They also are official banks, so they got the bank charter. I think that was a couple years ago, which is a huge deal because not a lot of fintechs have their bank charter. I don't know if Robinhood has a bank charter, but I know SoFi does, and that's a big deal because that allows them to have a lot more products and offer certain services that they wouldn't be able to. So another great thing with SoFi, I got an offer to invest in SpaceX through a partner with SoFi. So I have an account with SoFi, an investing account. I signed up for their private investment account. And a few months ago, or a month ago last year, I got an offer to buy $25,000 minimum of SpaceX. That's not possible anywhere else for an investor like myself. So it's things like that that are a huge benefit for being a member with SoFi. So things like that that just show that they're different than the competition out there, and they're willing to offer those to their members. So that's something else I forgot to talk about. Diversified revenue, talked about it. Macro tailwinds, we talked about the lower interest rates. Student loan refinancing could drive growth. The last couple of years, no one's been paying their student loans. That's going to change now. So that's good for SoFi. They'll start to get some of that revenue back. And this is the number one reason why I started following SoFi is their CEO, Anthony Noto. Guy's a rock star. I think he was at Goldman Sachs. Then he worked for the NFL. Now he's at SoFi. And he was also in the military. So you listen to the guy, there's nothing not to like. And he's just done a very good job running this business. And hopefully he stays there for a long, long time. And some of the cons here, valuation, competition, and stock overhang, which I think is interesting. When you see a stock that has recently made a big move, we look at SoFi. It was just last year that it was $6. Now we're $16. A lot of people wanting to take some profits, or a lot of people that bought poorly in here and are back to break even. Now's their chance to get out. So we could see a little bit more of the stock overhang, meaning people looking to exit the position because it's made such a big move. So again, this is a very small position for my portfolio, and this is something that I'm looking for the long term, and I'm going to keep watching it quarter by quarter, but it's been doing a great job. Bottom line, SoFi is strong long-term potential as a fintech disruptor with a diversified business model and profitability momentum. However, valuation competition and execution risk require careful consideration. So this is, again, probably 1%, maybe even less of my portfolio, and this will not get any larger than 5% of my portfolio. So that is what I think about SoFi. I think their earnings were much better than how the market reacted. They're doing great in not just a quarter by quarter, but year over year. And I'm excited to see what the rest of 2025 brings for them. Interest rates, but not just interest rates, how they continue to execute on all their platforms that they have. So that is SoFi. Wrapping up my preparation for Tesla. We got Apple coming out here in a few minutes, so there'll be a lot more earnings videos coming out. It's been a busy week. I love it. Hope you guys are enjoying it too. And I will talk to you all soon. That's all I got. Peace out.